So where are you seeing the value right now, Neil, in particular sectors or in particular countries, geographies?
Well, I think for the time being that obviously US equity markets are still very much in an upward trend. The S&P 500 is not far from the record high. It's narrowly led for sure by the tech sector. Valuations are high, but you never know. It might well be that there's a little bit more left in the tank for US equity. So I quite like that sector, and I wouldn't want to be too underweight there. I think emerging markets obviously a better value now, but again, it might be too early. I think what we really need to see is some indication from the Fed that they're not going to continue aggressively with a rate tightening cycle, or indeed that the US dollar can actually come back. And maybe there's some sort of signs that what we've just seen very, very recently is the US dollar is stalling, despite the fact that Treasury yields are heading higher. So that might provide some interim relief for emerging markets, particularly those countries, those markets where macro fundamentals are positive.
Neil, so far, there's just not, it's hard to gin up some enthusiasm about some of these opportunities, right? Because things are so stretched either to the upside or the downside. Is there anything that you think globally is sort of an under-the-radar attractive entry point that people maybe are missing or aren't noticing as much as they should?
Well, I think that as the summer holidays conclude, this is going to be an issue that fund managers, real money investors will tackle in their asset allocation committees. There's understandably a degree of caution about being the first in to these markets at a time when there's an element of uncertainty over the US-China trade talks. You've still got the Fed looking to raise interest rates. Interest rates elsewhere in the Eurozone, Japan, look as though they'll remain low going well into 2019. So, I guess with the moves that we've seen, investors will be looking for entry points into emerging markets. They'll be looking for positive macro fundamentals. Some Asian emerging markets actually do look value. I think that there are worries about corporate credit. In the aftermath of the Lehman crisis, there's been a retrospective from many commentators, many economists, as where the next financial crisis might come from. And it's the world of debt, world of corporate credit that seems to be the main risk at the moment.